All right, everybody, welcome back to the channel. I hope everybody had a Merry Christmas. We still have one more week of holiday left to go, so it's going to be another shortened week. Exactly what happened last week is the same thing that's going to happen this week, and then the markets will be off back to normal after we get through the new year. But as of right now, we're going to discuss Bitcoin. We're going to look at the S&Ps. We're going to talk about a few other things, see what is transpiring in the markets. A lot of people are assuming this is the top and that we're going to see a pretty big bear market. The Fed did do 90-degree pivot as to what they were expecting to do, and we'll discuss that a little bit as well. I think it's important for people to kind of understand what's going on under the hood and to not get freaked out just yet. So on Bitcoin, we have had a pullback, and I do not like the relative weakness that we are currently seeing on Bitcoin. When I say relative weakness, what I typically mean is just this. If you go to the pullback that we had from the all-time high to when the Fed did have their meeting, the sell-off that we've seen here, if we go up, you can see that Bitcoin did get a move up to a little bit above the 382, but could not retest the 50% retracement of this sell-off move. So this does show a little bit of inherent weakness, as the S&P 500 made it all the way back up to the 786 of their initial sell-off. So Bitcoin does show a little bit more weakness than what we're seeing in the S&P 500. We did get a sell-off Thursday and Friday. That, in my opinion, is due to BlackRock hitting the sell button. If we pull up this thing right here, you can see that we did get a lot of outflows, and it was rumored that they sold like $190 million worth of Bitcoin. So yes, it was a big sell, but not a massive sell. It wasn't in the billions. So nothing concerning right then or just yet. Now, as far as pullbacks go, it was, more than a 10% correction. And since Bitcoin is up, or since it got to the $108,000 price range, that is a significant amount of points in between. You can see $16,000 has came off since. So yeah, it is a almost 15% pullback. But we remember when Bitcoin could do 40% corrections while still making fresh all-time highs. So I wouldn't get too concerned just yet. But at the same time, the threat is out there. If we do go look in on our moving averages, you can see that we did briefly regain the 21 exponential for 2 days, and then we lost it again. That shows that there is a little bit more fear still out there as of right now when it comes to Bitcoin than not. But like I said, as long as we're not taking out this red line and closing dailies under it, I think Bitcoin will be fine. If we do take this out, which is looking more and more likely, the more time we spend down in this area, there is a chance that we could pull back to daily support and even a little bit lower. So I'm going to pull up a tool right here. This range filter thing is kind of used right now as a buy and sell tool. I wouldn't necessarily use it for that. What I do see that it is very good for is giving you a 3 standard deviation range of the current or the past 100 price bars. You can look at the bottom line as the bottom edge of the standard deviation. As of right now, we are on the bottom edge. We did close a daily under this daily candle, so we have lost daily support. And it does look like that target might just be the $92,000 low that was set on Friday, December the 20th. So if we take a measured move of this, where does that put Bitcoin in the future? Potentially. So we could do something like this. That's one standard deviation of this entire range. You can see that it puts you right about 86K. And that's probably where support would come in, in my opinion. That is, as long as everything stays bullish and everything keeps moving in the upward direction. I think Bitcoin could potentially get to 87, but then I think it would find support. If we blast through that and then get as low as filling that gap, then obviously there's going to be problems. We go look on the weekly time frame. Let's get rid of this tool. We no longer need it. Pull up our RSI. You can see that you're still well above the 60 on the RSI, which is typically a bullish signal. This week looks bad, but it is not a blow off top. You have taken out 2 weeks worth of lows in 1 week. That's not that bad considering since we made this breakout here back in November the 18th, you haven't really gone anywhere. Even though it's a $16,000 range, it still isn't really massive. You know what I mean? Like in comparison to what the breakout that we got here. So one could almost look at this as a potential consolidation range. So we'll see how Bitcoin reacts moving forward. You know, obviously you have made a lower close on the weekly and there is potential that we head lower. But what I would love to see is I would love to see Bitcoin get down to the 60 on the weekly time frame and be able to hold this area. If it gets down to the 50, that's okay, but it's not going to look as pretty, but anywhere can act as support. We pull up our moving averages, you can see that you are still well away from the 21 exponential moving average. So, I mean, it's consolidating more or less, giving the 21 time to catch up. If we consolidate for a few more weeks in the sideways price range, that would be okay in my opinion. What I don't really want to see moving forward are big bars, big weekly sell-offs. I don't want to see that. I did put a tweet out Monday thinking that the low was in, and we did get a nice bullish move off of that. So we are going to wait until next week to see, you know, what do we do tomorrow and going into Monday, and do we make a fresh weekly low on Monday? If we do, I'll probably try to take that buy, looking for another bounce to the upside, trying to catch a weekly low, just for an intra-week scalp. But everything looks still very bullish. This is still a very bullish structured market. Going back to the daily time frame, let's pull up the Bollinger Bands just to see that volatility expansion starting to take place here. You can see the bottom edge of the Bollinger starting to point to the downward direction. This is still kind of sideways, but if we get a big breakdown here, you're going to see this upper Bollinger Band start to expand as well. Just meaning that there's going to be a potential for, you know, another move to the downside. But once again, I'm not looking for this gap to get filled anytime soon. I think your gap was filled on the S&Ps, but only time will tell. All right. So that's Bitcoin. Still overall structured bullish. When you're operating on such a small time frame, it is possible to take intraday short scalps or, you know, intraday long scalps. But as far as my overall positioning on Bitcoin, I am still holding strong. All right, let's go to the S&P 500. All right, so here we have the S&P 500. We did recapture this trend line. This trend line comes from these lows down here that was put in August when we had the yen carry trade unwind. And you can see that it did a pretty good job catching these lows in here. And then here is the Fed day. And that's when you broke down below that trend line, put in a midpoint gap fill, and then got a bounce up to your 786 retracement. And then we seen a little bit of a sell-off on Friday. Is this concerning? No, because you went back to unchanged. That is taken from Friday's close. Just like our next week's blue line is already in. It is taken from Friday's close. Your midpoint would be 59.70, spot 85. Top edge of your expected move, 60.52, spot 85. It's only an 82-point move. And then your lower edge, 5888, spot 85. So this is what the options weekly expected move is calculating, an 82-point move to the upside or an 82-point move to the downside. It is possible that we blast through it, seeing how we did pull back here, and it does look like a failed recapture of this trend line. But with that being said, if you get rid of the trend line, it doesn't look that bad, as basically we opened the week here. We traded up to the top edge of the weekly expected move. So it is only normal that the sellers would take positions here looking for a retracement potentially back to where we opened the week. And that's exactly where we bounced from yesterday. So all in all, you still close the week up. Here is your weekly candle, and it is up. It does look bad as it is an inside week. If we would have taken out the high, it would be a bearish engulfing candle. But we don't have a bearish engulfing candle because we didn't take out the all-time high this week. But it still doesn't look great. It still does look like you're going to see more downside potential continuation. I'm only expecting price to get down to 56.69.67. This is that old high here. We broke out right here, and you can see complete and total support comes in there and there. So this is the area that if we did get the breakdown, if we did sell off hard, the same goes for this range here. That'll put you right down here. So if we go back to the daily time frame, that's exactly how I took that red arrow. Same thing from here to here, and then I just placed it there. And that gives us a potential target of 56.69. In my opinion, would probably be a buying opportunity. If we get a big weekly range that blasts through this, that is not buying. That is big sell side, and big sell side has to be taken into account. All right, always. But if we stay at or within 56.69, you're still within a standard deviation. It's nothing too volatile. Let's go look at the VIX real fast. So here is the VIX. We had a gap up in here. So when we got the Fed sell-off, we did explode up above that. This was also what helped us capture that weekly low on Bitcoin, because we were looking for the VIX to stay under 2020. Old gaps sometimes act as support moving forward. You can see the wick low here came in perfectly to the old gap and then bounced. And then we have another gap here, but that's neither here nor there. But anyways, moving on, we broke back under. So essentially when we pushed back up here, this is where we got long on Bitcoin. And that trade didn't work out on Monday. It wasn't until Tuesday that we actually got the bounce. All right. And I was stopped out of that trade. But anyways, if we hold this area here and move lower, then that's really good. And then as long as we do not break back above 18, then that's not going to threaten 2020, right? So as long as we stay under this old gap here, in my opinion, your VIX is going to melt back off. Remember, there is a very teeny tiny, like 4-cent gap down here, but I am not expecting it to get back down there anytime soon. And maybe never, I don't know. All right, so the XLE was a trade idea that I mentioned last week, looking for a breakout on oil. As you can see, we haven't gotten that breakout yet. So volatility is still shrinking on this. But I do honestly believe if we get a break out to the upside or a break down to the downside, we will get a pretty big move. Be careful if you are trading oil or anything that has to do with the oil markets, meaning nat gas or oil stocks. If oil breaks out, it could get very volatile in, one direction or the other. But that volatility has not kicked in just yet, so we are still waiting for that. Let's go look at the XLE. All right, so basically what we were looking at is a technical double bottom. This is a bottom. I was expecting this to get liquidated. It did. Then we got the move higher. Basically what I was watching is the 2024 yearly opening range, still watching it. We did get a breakout above on this day. We did close above it. We closed above it on Thursday and yesterday. But what I don't like about this is we got a nice expansion all the way up to 85.49 yesterday, but then it closed right back at the open. So even though I am in this and I am long, I will be managing it. If we start moving back under this 2024 yearly opening range, I have to close that trade because the near-term trend is down. Regardless of what kind of pattern or technical reason that prompted the entry, if the trade isn't working by next week, then it's a probably good bet to go ahead and close it out. Now, if you have your risk managed all the way down to this low, then you're in better shape. All right. Then you don't have to do anything unless that low gets taken out. But for me, if we're closing dailies back under the yearly opening range, I no longer want to be in the trade. That's just the way that I approach the markets. So if you are in this, or if you want to take it now, as long as you are above 84.43 to the price, to the penny, I think you can be long. If you are under that, I don't think you should be long. I don't think you even want to be long, because the near-term trend is volatile and it is down, and we did not see a volatile down move on oil. This is Faraday Future. They're a company. They make electric cars. It is a garbage company. All right. Very garbage company. This is not an investment idea. This is a trade idea, and it only triggered based on a short squeeze scanner that I run. And basically all I did was set an alert above the last swing high, letting me know that if we get above that, then the short squeeze may be taking place. Now, here is the short float. It's 26.8. That's a pretty good size short float. Anything over 20% validates a potential long based on a short squeeze only. I bought shares when I got the alert, so I'm in this at 172. As long as we're above 172, I'm going to keep it open, and hopefully we can get a nice bounce. Now, this is not a low float stock. It has a float of 40 million shares. Generally on your low cap, low float stocks, or your penny stocks that are generally traded based on bullish momentum, those you typically want to see less than 10 million shares. So this may not squeeze at all. We may come back and this thing may be gapping down to a 140 or 120 come Monday. So be careful if you are watching this or if you want to take part in this. But I'm only long to make whatever I can make on it. If it continues to go up, I would more than likely exit that on a 50 cent or a dollar move higher. I would basically get out of the trade. So if we get up to like 225 or in that area, I'm going to be taking profits. I'm not expecting this thing to bounce up to 12 bucks. I'm definitely not expecting it to bounce up to 140. All right. Basically what triggered this buying pressure here was unusual options activity. Apparently, traders were purchasing high volume of this call options, and I looked inside of the options chain and I could not see the strike at which this unusual volume activity was taking place. So I have no idea. We can never know what's going on inside of those volume spikes or call option spikes. That doesn't necessarily mean that the stock will be bullish, but it did mean that you did get a bullish spike on Friday. So FFIE is something that I am watching and long for a potential short squeeze, but will exit if we get back under the 150 mark. All right. And finally, growth versus value looks really good. Yeah, we closed down on the week, but that's okay. That's after a 3-week good move back to the upside. If you look at the move lower in comparison to the move higher, this candle is right in line with the pullback. It's not a big, nasty candle. Since it's not that big, there is no concern right yet. This does not look fearful. You still are not seeing any fear on the XLK versus the energy sector. Not yet. Right? That looks very good. Like you're getting a pullback. That's as simple as that. Same thing on this one, just a pullback. The XLE, I mean, the range on that is so tiny. It's literally, it's not worth being afraid yet. Here, we were keeping a real close eye on this, right? Because we wanted to see, do we continue higher? Is that fear actually in the marketplace? And no, it wasn't. So as of right now, going into next week, I'm looking at the S&P 500 as being a pullback right now. And I am looking for it to continue to move higher. Maybe not this week, maybe next week, right? Pullbacks can take a couple weeks to transpire, but eventually I am looking for a low to come in and then the markets to start to trend right back to the upside. Now, if we get back up here in this week on this, then I will be concerned a little bit again. But that's it, just a little bit concerning, not necessarily all out bearish, all right? There's no reason for anybody to be all out bearish just yet. Everything still looks okay, but I will continue to update you week over week. Thank you so much for being here. You guys are awesome. Thank you so much for your time. Make sure you guys trade safe, trade smart. Happy New Year, and happy trading, everybody.